Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. I'm going to take a look at 5 currency pairs in 5 minutes. You think I can do it? Well, I didn't think the Dow could get to 20K, and it's there today. So let's get going. This is the daily chart of the euro versus US dollar, and in trading here today, we're staying above this 38.2% retracement of the move down from our high in the month of November to our low that we saw at the beginning of this trading year. That level again comes in at the 1.0706 level, and our low price in trading today came in at 1.0710. So stay above that level keeps the bullish bias intact for the euro versus US dollar. Let's move to the hourly chart, and if we take a look at the hourly chart of this currency pair, note the 100-hour moving average as well. That 100-hour moving average currently comes in at 1.07136 on our way to our low price here today. We did stall ahead of that level, ahead of the 10706 level. So things are still looking up for the euro versus US dollar. The problem on the top side is this double top right here around the 107.74.75 level. We need to get and stay above that level. Our high price in trading today came in at 107.69, just short of that level. So we need to push higher for the euro versus US dollar. Let's take a look at the sterling versus US dollar next. And what's so significant about this? Well, if you go back to June of 2016, June 24th, 2016, what was that? That was the Brexit day. And on that day, the market fell below the blue line right here. That's the 100-day moving average. And today, 151 days later, we finally moved above the 100-day moving average. That level comes in at 125.32, and we need to stay above 125.32 in order to push this market, continue to push this market to the upside. So far, we're seeing it in trading here today. Our high price is extended up to the 126.27 level. I like the fact that on the corrective move to the downside, we did stall against that 100-day moving average, ahead of that moving average, and moved higher. So the bulls remain in control for this currency pair. Stay above that 100-day moving average is key for traders on the long side in the sterling versus US dollar. Let's take a look at the dollar versus yen next. And on the hourly chart here, what sticks out to me? Well, look at this test of the 100-hour moving average here. The market held that level and moved down. Look at the test of the 200-hour moving average here. The market tested that level and moved down. Look at the test of the 200-hour moving average in trading here today and the 100-hour moving average. Market held those levels and moved down off of that level. This yellow area represents an area where there was old swing highs and swing lows. We are currently trading right around that level. So we need to stay below it at 113.77 to keep the pressure onto the downside. But we are staying sort of in the middle of the trading range and trading here today above the 100 and 200 bar moving average on the 5-minute chart currently at the moment. So things are still looking a little bit more bullish here for the dollar versus yen, although that we have that topside resistance clearly against our moving average levels. So those levels come in at the 113.90-92 level at the moment. Let's take a look at the dollar versus Canada. This is another one of those currency pairs moving through a longer-term moving average. In this case, it is the 200-day moving average. In trading yesterday, the market came down to that 200-day moving average. That's a green line in this chart. Held support and closed higher. In today's trading, we moved back below that level and are trading lower. If you take a look at the hourly chart for that currency pair, the 4 hours through here traded above and below that 200-day moving average. So the market wasn't necessarily ready to go to the downside. But note what happened at this hourly bar. That hourly bar held resistance right against that 200-day moving average. Was that a clue from traders that they were leaning against that 200-day moving average at that point? It seems that way as the market rotated to the downside, and we're moving away from that moving average now. So as long as we stay below the 200-day moving average in the dollar versus Canada, the bias remains to the downside. The next currency pair and final currency pair I'll take a look at is the Aussie versus US dollar. And like the sterling versus US dollar moving above a longer-term moving average, like the dollar Canada moving below a longer-term moving average, the Aussie versus US dollar came and tested two key moving averages in overnight trading after their CPI statistics came out weaker than expected. Those two moving averages are the 100 and 200-day moving average. They're converged here around the 75 level. Our low price for the day came in at 75.14, and we moved higher off of that level. So key support down there at the 75 level. Looking at the hourly chart for this currency pair, the price has been trading above and below the 100 and 200 hour moving average. That's the green and blue lines in this chart. Also above and below the broken trend line here as well. So the market's not sure about what it wants to do. We'll see how it all pans out. So that's 5 currencies in 5 minutes. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.